Welcome back to Entrepreneurial Edge. Let's talk about something that scares a lot of people, a stock market crash. The thought of losing your hard-earned money overnight can be terrifying, and it's a fear that keeps many people up at night. When the market takes a nosedive, it's easy to feel helpless, watching your investments shrink and wondering what to do next. When the numbers turn red and the news screams meltdown, panic is natural, but it doesn't have to be. Most people react emotionally, selling in a frenzy or freezing in fear. But what if you could approach these moments with calm and confidence instead? Enter Warren Buffett, the Oracle of Omaha, one of the most successful investors ever. He's not just a billionaire, he's a legend, admired for his steady hand and wise decisions, even when everyone else is losing their cool. He's thrived through recessions, bubbles, and crises by sticking to simple, timeless rules. While others panic, Buffett sees opportunity, using his experience and discipline to make smart moves when it matters most. Buffett's wisdom isn't about get-rich-quick schemes or fancy jargon, it's about common sense. He believes in understanding what you invest in, being patient, and ignoring the noise of the crowd. He treats buying stocks as buying a piece of a real business, not a lottery ticket. This mindset helps him stay focused on long-term value, not short-term price swings. When you think like that, the daily market swings matter less. You stop worrying about every dip and start seeing the bigger picture, growth over time. Today we'll break down Buffett's playbook for surviving market chaos, your financial storm shelter. You'll learn how to keep your cool, make smart decisions, and even find opportunities when others are afraid. These rules will help you turn fear into opportunity and build a better future. So if you want to invest smarter and sleep better at night, you're in the right place. Let's get started. Let's dig in. Buffett's first rule: stay calm. In a crash, your biggest enemy is your own fear. Buffett says temperament beats intellect. Don't get swept up in the panic. When others are losing their heads, take a breath and think clearly. Second rule: invest only in what you understand, your circle of competence. If you can't explain how a company makes money, don't own its stock. During crashes, avoid complicated investments and stick to businesses you know. Understanding your investments gives you confidence to weather storms. Review your portfolio. Is it within your circle? If yes, you're on solid ground. Discipline and knowledge, not genius, separate winners from losers. That's how you build a rock-solid financial foundation. Buffett's third rule is simple, but powerful. Think long-term. In a world obsessed with quick wins and instant results, he stands apart by focusing on the big picture, not the daily noise. His favorite holding period? Forever. He believes the best investments are those you never want to sell because they keep growing and compounding over time. Don't buy stocks just to flip them next week. Buy businesses you truly believe in and hold them for decades. Let your investments mature, just like a tree that grows stronger year after year. Market crashes will test your patience and resolve, but remember, short-term drops are just noise in the grand scheme. The real value comes from staying calm and focused. For long-term investors, a market crash isn't a disaster, it's a rare opportunity. Think of it as a sale on the world's best businesses, a chance to buy more at a discount. Buffett's fourth rule is just as important. Look for bargains when others panic. When fear takes over the market, that's when the best deals appear. Be fearful when others are greedy, and greedy when others are fearful. This mindset helps you avoid the herd and make smarter decisions. Crashes let you buy great companies at dream prices, opportunities that only come around a few times in a lifetime. Generational wealth isn't built overnight. It's created by buying quality assets when they're cheap, holding them through ups and downs and letting them grow for years. Ignore the headlines and daily drama. Focus on the true, long-term value of your businesses. That's where real success lies. Remember, you're an investor, not a speculator. Your job is to think ahead, not react to every market swing. Stay patient, trust your process, and let time do the heavy lifting. The greatest rewards go to those who think in decades, not days. Next, let's talk about how you actually find bargains in the market. The secret is preparation. Being ready before opportunities appear. Most people wait until everyone is talking about a stock, but by then, the real bargains are gone. You need to do your homework in advance. Buffett's fifth rule is simple but powerful. Ignore the noise. The market is full of distractions and opinions. Financial news thrives on panic and sensational headlines. Their job is to get your attention, not to help you make smart decisions. Don't let fear or hype guide your investments. Instead, Buffett focuses on understanding businesses. He doesn't listen to forecasts or predictions. He studies the numbers, the management, and the long-term prospects. The sixth rule: always keep some cash ready. Cash is your ammunition in the world of investing. When markets crash and everyone else is panicking, cash gives you the power to buy great companies at a discount. It's your chance to act when others are afraid. Market crashes are rare, but they do happen. When they come, having cash on hand gives you both power and peace of mind. You won't be forced to sell at a loss. Cash is also your safety net. It protects you from making desperate decisions and selling at the worst possible time. So, build your cash position during good times when stocks are expensive and opportunities are scarce. Be patient and disciplined. When the crash finally hits, that's your moment. Deploy your cash strategically. Buy the companies you've researched and have been waiting for. Don't just throw money at the market blindly. Stick to your plan, review your watch list, and invest with confidence. That's how you turn market panic into profit. When preparation meets opportunity, you're ready to win. The final rules are about what to do after you've invested. Seventh rule: don't try to time the bottom. No one can. Waiting for the perfect moment means you'll likely miss the recovery. If a great company is at a fair price, buy it, even if it drops more tomorrow. Buffett often buys gradually, averaging his cost. Eighth rule: hold your strong companies. If you bought quality, a crash doesn't change that. Selling in a panic is trading a champion for a dud. The market recovers, and strong companies lead the way. Stick to these rules, and you'll turn chaos into opportunity. Thanks for watching. Like and subscribe for more practical investing wisdom.